The dream of owning a home has long been a cornerstone of the American dream, but for many, that dream has become increasingly elusive. In recent times, the National Association of Realtors conducted research that revealed a challenging situation. High home prices, mortgage rates, and limited inventory are causing prospective buyers to delay their homeownership plans. In this video, we'll explore why interest rates alone haven't lowered housing prices, and what can be done to make houses more affordable for everyone. The NAR, in partnership with the Morning Consult, conducted its 2023 Experiences and Barriers of Prospective Home Buyers Across Races, Ethnicities survey. This comprehensive survey reached out to individuals from various racial and ethnic backgrounds to understand their experiences and challenges in the housing market. The survey revealed that a significant proportion of prospective home buyers, regardless of their race or ethnicity, are delaying their home purchases. Asian 27%, Hispanic 24%, Black 20%, and White 15% respondents cited waiting for housing prices to drop as the main reason for not buying a home. This delay in home purchases is not only about waiting for lower prices, it's also about waiting for mortgage rates to decrease. White respondents, for instance, mention that they are waiting for mortgage rates to drop. Additionally, the survey indicated that not having enough available homes within their budget is a common concern among prospective home buyers. Let us get in the depth of the matter. Before the 1980s, housing served a simple purpose: providing shelter and maybe a yard for leisure. It was primarily a place to live, not a financial investment. House prices typically grew in tandem with wage increases and stock market returns. Homeownership meant security rather than profit. The rise of real estate as an investment. The 1980s brought a fundamental shift as real estate became an attractive investment option. Mortgage bonds entered the financial scene, allowing bundles of mortgages to be bought and sold like stocks. This change in perspective led to banks offering more accessible mortgages, irrespective of borrowers' risk profiles. The roots of the housing affordability crisis were beginning to take hold. The financial crisis of 2008. The pivotal moment in this situation came during the 2008 financial crisis, when Wall Street's recklessness plunged the economy into chaos. This crisis led to a massive wave of foreclosures, contributing to oversupply, falling home prices, and economic turmoil. It also set the stage for Wall Street's increasingly influential role in the housing market. Wall Street. In 2012, the U.S. government invited institutional investors, including hedge funds, banks, and private equity firms, to purchase foreclosed homes in bulk from Fannie Mae. This marked the entry of Wall Street into the residential real estate market. These investors created real estate investment trust rights to manage these properties, ultimately becoming corporate landlords. Changing objectives. Initially, Wall Street's goal was to buy, rent, and eventually sell these properties back to occupants. However, as the economy improved, they discovered a more profitable path by becoming long-term landlords. With low borrowing costs and strong rent income, this shift became a lucrative strategy. Impact on everyday people. This corporate landlord approach led to consequences for everyday people. Rent hikes, additional fees, and neglect of property maintenance became common. The pursuit of profit often outweighed concerns for tenant well-being. While these institutional investors may not dominate the national market, their concentration in specific local markets can significantly impact pricing. Some areas, like Phoenix and Atlanta, have seen 1 in 5 single-family homes owned by institutional investors. Corporate veils. The true extent of institutional investor ownership is challenging to quantify, as corporate structures allow them to hide behind numerous legal entities. This opacity means they may own a more significant portion of the market than is officially reported. Zoning regulations and NIMBYism. A fundamental issue contributing to the housing shortage is restrictive zoning regulations. Single-family zoning dominates in many cities, limiting the construction of multifamily and affordable housing units. These regulations often reflect the "why not in my backyard" attitude, opposing denser housing in their neighborhoods. Home builders' struggles. The home building industry has faced difficulties since the 2008 recession, struggling with supply chain issues and soaring building material costs. This has hindered the construction of new homes, exacerbating the housing shortage. As the housing market remains complex and influenced by various stakeholders, everyday Americans bear the brunt of the consequences. Housing affordability continues to deteriorate, affecting the pursuit of the American dream. The housing affordability crisis is a multifaceted issue with no simple solution. The complex interplay between institutional investors, local zoning regulations, and supply chain problems leaves many Americans struggling to achieve homeownership. To make houses more affordable, addressing these factors will be essential in restoring the dream of owning a home to millions.